Hi, my name is Michelle. In my previous video that I talk about how much I make a month selling option, you all seem to be very interested in that. So in this video, I'm gonna do something very similar. I'm going to share my January number and also including what options I sell, and I will also share with you all the detailed portfolio share screen later so you all can see exactly what I do. Before we dive in, I first wanted to share that I am not a professional option trader, so please do not take my advice as a financial advice or anything. I am simply sharing what I do personally. And why do I started to sell option? The main reason is because I quit my job last year, and while I thought I should have enough savings and investing to sustain my basic lifestyle, I realized I think if you leave your work at an early age, it's actually really scary to to think about that you no longer will have that stable income coming in. And because of that, I start to explore ways to make some supplemental income or finding things that I wanted to do that I really like. Not necessarily for money, but again, money is important. And I am no new to selling option. I used to sell a lot of cover calls in my position. I also major finance in my undergrad, so I literally study financial instruments and derivatives for 4 years in my college, and there was a course actually talks about options. So yeah, I cannot even imagine how, like, for people who don't have a finance background, I think option selling can be really intimidating because it is highly leveraged, and people might think to buy option or sell option is a get rich quick way. I disagree with that. I think in order for you to be successful in selling option for the long term, you really need to think about risk management. And I emphasize this a lot in my prior videos as well, and I will continue to emphasize this in all my future video. If you are thinking about you want to start trading option, not just for a week, not for a month, but for a long term, you need to know exactly what is your exposure in each position that you open, and you need to know, are you okay with losing the max loss of your option trading? I am also an option seller. I do not buy option, so I sell option to other people. Anyways, let's dive in. So in January, I'm gonna start to share my screen actually. Alright, so I am sharing my screen now. In January, again, I am making around 11K in January. And I'm talking about the position that I actually closed in January. It doesn't mean I sell this position in January. I can probably, some of them I sold them in December, but I closed in January. So this is the number, yeah, it's like 11, yeah, 11, around 11K. This time my sheet is finally correct. Last month when I did it, somehow the last row, it couldn't show. So if you try to add up, if you try to see my numbers here, you won't come up with the number last month. But this month it's all correct. And so I can be more comfortable sharing with you all exactly what I do. And I will not going to all the trades, but I do want to share a few of the highlights of what I did in January overall in order to give me this around 11K gain. And I think some people might also curious about, like, what is the leverage, like how much cash I actually need to have in order to trade SPX. So SPX, it is a cash settled option, it meaning there's no underlying stocks there. If you get assigned, it's all cash settled. So I think that can be good or bad depending on what you're looking for. I really like it because I think it just makes everything a lot more easier and more clean, because if you get a sign, you just lose money and that's it. You do not really own any stocks or anything, you just lose cash. So I like SPX, and also there's also a really good tax benefit. So SPX has a preferred tax benefit that is 60/40, meaning you get all your proceeds as an option seller. 60% of the proceeds is considered as long-term capital gain, and 40% is short-term capital gain, meaning only 40% of your proceeds will be treated as kind of like your ordinary income that fall into the typical IRS tax bracket. And I think that is amazing because tax is such a big component when you think about selling option, and you don't get any of the similar benefit if you're selling any other individual companies. All right, let's dive right into the numbers here. So on the Excel sheets I am sharing with you, I'm highlighting these trades. So this is an iron condor, and how do you read that is I sell this iron condor. It's a component of a call spread and a put spread, and I sell this iron condor at December 31st last year. So you can see that I sell a 5 contract of 7,200 SPY, and I buy back 7,100. Sell and buy, so that this is basically a call spread. And yeah, these are basically the money I make here. And then the same day, December 31st, I also sell a put spread, and the put spread is also 5 contract too. So it's between 6,200 and 6,275. So you can also notice the call spread and the put spread, the wings are different. The call spread I have it at 100, where at the put spread I have it at 75 only. There's a couple reasons for that, and I think it can also not be all logical, but this is how my brain works. So on the call side, because I think it's usually when the index goes up, it goes up gradually. It doesn't shoot up all of a sudden. But when it goes down, which is the put, when it goes down, it's like a cliff. It will just crash very, very quickly. So in my head, I always have a fear about selling puts. That's why usually for my puts, I have a less spread. So that's why, like in this specific trade, if you group it together, again, this is like an iron condor. I know it's hard to read in the Excel sheets, but if you have a brokerage and if you're playing around with their different option strategy, your broker will group these as iron condor. So that's why you can see on my call side, the win is 100, but put side it's only 75. 75 is still quite a bit. So if that means 75, meaning if, and I have 5 contracts, so my max loss for the put side, let's say the stock actually goes below 6,200. Yeah, so if the stock actually goes below 6,200, my max loss is 7,500 multiplied by 5 because it's 5 contract. So my max loss is $37,500. So that's on the put side. On the call side, my max loss is 50K. It's 50K because the wings is 100 and I have 5 contract. So let's say if the stock goes above 7,200, I could lose 50K on the call side. So these all combined, my exposure is ultimately 50K. So this is basically how you read it. Let me see how much I make from this trade. So yeah, actually this one I only make 16, yeah, around 1,600. It's not a lot. I think it's because I also didn't close, yeah, I didn't hold it for a long time either. So I sell them at the end of December, and I actually I decided to close it on January 16. yeah, I don't remember why, but anyways, I feel I have made enough profits, so I decide to close it out. And then there are a few other trades. These I will just quickly go through what I did, but January 6th, yeah, you can also see in January, if you remember the first week, like starting January 5th, I think there was this market euphoria that's happening, that people suddenly feel very rosy about everything. So that's when I did this. So on January 6th, I sold a call spread between 7,200 and 7,300. The expiration date is February 10th. I usually like to do around 35 days out, and these are the strategy from these are from Tasty Trade. So if again Tasty Trade, I think they have really good materials, so you can also check them out as well. And for this one, I basically I sold on the 6th and I buy them back on the 26th. So these I hold for 20 days. I also usually don't hold them for their whole period of time. I like to close them out when I make maybe 75% of the profit. So this one I did quite well. This one I make almost 4,000 for these. And the exposure, again, because I sell 5 contract and the wings is 100, so the exposure is still 50K, which is still quite high. So I really want to emphasize, for option selling, you need to be very aware about when you sell each spread, what is your max loss and are you okay with it? Because it's not a matter of if it will happen, it will happen, but when it will happen. So please do be really careful about knowing your max loss. That's really the key of not being wiped out in the long term, and that's the key of being able to be consistent and continue to be successful in option trading. And well, actually, this one I want to talk about too. So this is yes, this is actually a put spread. I think this is this is a good example. So these are a put spread that I sold on the 14th, and I buy them back on the 26th. So what I did there, so actually on the 14th, I think on the 14th maybe there was a dip. I think there was a dip in the market and the volatility spikes. When the volatility spikes, it's the best time to sell puts. Again, because everyone is panicking, and if you have a steady heart, steady mind, that is really the perfect time to sell puts, because when everyone is panicking, you get more premium. And in an ideal scenario, when you sell puts, when volatility spikes, ideally, after you sell it, the volatility dies down and things go back to normal, and then you can just collect premium and collect the theta and time decay, and you can make a profit from it. But yeah, that's what I did on the 14th. So I sold 2 put spread. One is expired on the February 10th, and the spread is between 6,425 and 6,475. So this is just a 50 spread. So this one, for a 50 spread, 5 contract, my max loss is 25,000. Because yeah, it's basically yeah, you can do the math yourself. And the other one I sold on the same day is the expiration date. This one is a little further away. It's February 23rd, between 6,200 and 6,300. So the wings is between 100. And yeah, so this one is definitely risky. Now that I think back, I wouldn't say this is a good strategy, because on the 14th, I think in my mind I was thinking, oh, it is just a blip, and it ended up just be a blip in the market. But it can also be the opposite way. So the market can pretty much crash. If it crashes, I have a lot of exposure, in these, and the expiration date, it's not that far out. It's one is February 10th, the other one is the 23rd, so they're like 13 days apart, which is not that wide. So I mean, thinking back, it is quite risky, but again, when you're an option seller, you do need to take on risk. So it really goes back to, you need to be okay with the loss, and you need to be very much aware about what exactly are you in it for. Okay, here is the last one. I think this one is still worth mentioning, so I am going to share this one as well. Actually, this is everything else I have on January. January, it's a weird month. There are a lot of news happening, and there are a few days where volatility spikes. But this is another example about why volatility is your friend as an option seller, especially if you're selling puts. So on January 20th, you might still remember, that's when Trump threatening to buy Greenland, and he was saying, oh, he might use force or things like that. So everyone was panicking, like people are afraid, oh, what if US actually send troops to Greenland, and what's gonna happen? And anyway, so there was a lot of uncertainty. So on the 20th, I think the S&P 500 actually crashes, maybe 2%. I don't remember the exact number, but it was a pretty red day. And again, those are the days, if you have a steady heart, those are the perfect opportunity for a put option seller. On the other hand, you can also lose a lot of money because the market can continue to go down. And I do not know, I cannot predict the market, but I'm sharing with you what I did in January, and then now looking back, it seems like a good trade. So I actually sold a bunch of put spread on the 20th, and so I sold one for, so I sold on the, this one on the January 20th, I sold one for expired February 24th between 6,100 to 6,000. So this is, again, this is 100 spread. I think at that time the delta is probably 10. I do not like to go too high. I think delta 10 is my sweet spot. Some people recommend delta 20. Again, I think this is also personal. It really depends on what is your risk tolerance. I do not have a high risk tolerance, so I like to do delta 10. I just feel more comfortable to do delta 10. And this trade, you can see that I only hold it for 1 day. I only hold it for 1 day. There are a couple of reasons why this one I only hold for 1 day. One reason is because you look at this, like I have a lot of exposure for the same stuff because these are all puts. And I feel really scary to have such a big exposure to potential market downturn. So on the 20th, when I sold it, I got a good premium, and then on 21st, I think market already bounced back, so I took profit. This one I make just $1,000. I think this is just about 50% profit of my premium, but I think that is already enough because at that time my main goal is really to close out some of the position to reduce my exposure. And some of the risk, you can see I close them out a little later, like these. Yeah, actually everything else I close on the 26th. And yeah, so these short-term puts, I only hold them for less than a week, and for the rest of them I make, yeah, almost 2,400 total. And yeah, so yeah, that's what I did in January. I hope you find these information helpful. Again, these are just what I'm doing on the option selling side. Yeah, overall, January is still a good month. I feel, yeah, I'm recording this in February, and yeah, February is such a weird month. The precious metals are crashing, and I think there's still a lot of uncertainty. But in the option selling world, again, we embrace uncertainty. But then I think I also still feel scared that I don't think I have enough wisdom to know when the market actually going to crash and when it is just a blip. So I think that's something I also trying to learn and master. And well, anyways, I hope this one is helpful for you all. And if you have any questions about option selling or investing in general, I am really passionate about these kind of things and I love to chat about these. So feel free to leave me a comment below. And thank you all so much for tuning in. I'll see you on the next one.